It was a bullish day on Wall Street. This is the Meerkat in for a D7 with the broad market review for the 15th of December, 2015. Well, it was a bullish day today. And of course, we're now T-1 to the big Fed announcement. More on that a little bit later. Hey, let's take a look here at the numbers on the day. Look at the SPY up 1.05%. We got the DIA up 0.9%. Now the 3M kind of dropped 6% today, which kind of held back the Dow. And then we've got the Qs up plus 0.62%. And look at them small caps. Kaboom! Up 1.44%. And even more importantly, Bank up 2.15%. Folks, that is a leading indicator of some very bullish action. We did have the VIX, and it was down 7.8%, but it's still at 20.95, right, the 21-point level. Why would the VIX still be so high? Because the Fed announcement is tomorrow. We'll talk about that in a moment. And then we've got silver up slightly, and we got gold down slightly, so a little bit mixed there. Oil up another 2.1% today. It's had basically a 10% swing from yesterday to today, lows and highs. There's been a lot of turbulence in that market, and perhaps we found a low on oil. A dollar up is 0.4%, and the trend trade for tonight is not on. Well, let's take a look here at the S&P Y chart on the S&P 500 ETF, and kaboom! As D7 talked about last night, we had ourselves a hammer. We had ourselves a bullish harami here, both indicating of possible reversal here, and kaboom, it did. But where did it go all the way up here to? Look real closely here. Right here on the 50 moving average, tagged it perfectly, and just above that, the 200 period moving average. And then also we have in here this, what I call the danger zone. This is the range that we have been in since October of 2014. And we're right on the bottom of that danger zone here. We're coming back up. It could now be some resistance. Again, that 210 here, we've crossed that 43 times this calendar year. And that's the center here of this band that has been going in between here all year long, except for this dip that we had here in August and September. So we got to look at this and say, what's going to happen tomorrow? Answer is, I don't know. Let's take a look here at the Qs as well. QQQ on the cap here. Again, in this very, very tight range. Blew up today, nice and big up here on the Qs. Still staying in this tight range here. And then the small caps, the big up today on small caps, but they've been more bearish. Look at that. They have not been following through. They're just starting to reverse here. And look at the volume. Big volume the last 3 trading days. And Bank really took off. Look at that, bouncing right off its 200 period moving average. And what is Bank? It is the NASDAQ Bank Index, about 470 banks, not just the too big to fail banks. So it's a real strong comeback here. So let's talk about tomorrow. So tomorrow, Wednesday the 16th, at 2 p.m. in the afternoon Eastern Time, the Fed will announce whether or not it's going to raise interest rates for the first time in 10 years. Yes, folks, we've been at near zero interest rates for the last 7. First of all, are they going to do it or not? Well, I cannot predict the future. I'm going to tell you that right now. Looks like they painted themselves into a corner that they're going to have to go ahead and do it. If they do raise interest rates, what will happen? If they don't raise interest rates, what will happen? Nobody knows. But what can you do to protect yourself? Well, if you still have time tonight to go ahead and go to groktrade.com to our site there. And right down here we have a course called hedging. If you can liquidate all your positions before 2 o'clock tomorrow, that'd be fine. I would never play through it, and I'm not going to play through it. But what I'm going to do is I'm going to hedge. Right here we have a course on hedging. Hedging made simple. Just click on that right there. It'll take you right to it. And this is a course on learning how to hedge. That is, you're taking opposite positions to keep your portfolio neutral during this Fed announcement. Do not go out there and play. You will get chewed up. If you get caught wrong way on a trade, it could just devastate and wipe out your entire account, because we don't know what's going to happen. So you can if you cannot get rid of your positions, go ahead and hedge. Go ahead and you can do buy now here, and you can go through the course immediately, and you can prepare yourself tomorrow before the big Fed announcement. Hey, and if there's no big move in the market, no big deal. You just take your hedges off, and you are protected through that period. Well, one more thing to say about the Fed announcement, and that is nobody knows the future. In the book, The Xerox Axioms by Max Gunther, which are the rules of risk and reward used by generations of Swiss bankers. It's an old book, but the axioms are very, very powerful. The fourth axiom is on forecasts. It says, human behavior cannot be predicted. Distrust anyone who claims to know the future. Or as I say, if someone tells you they know the future, turn around and run. Trade safe and trade well.